Happy very dude. That's why it's don't do it live, right?
Totally.
All right, game face. 3, 2, 1.
Game face.
Happy Veterans Day, everyone. I'm Mike Chavez. I'm here with Dane Murray. We'll get into all that, but what I really want to do is address your questions. If you qualify for the VA loan and why you should use it. If you are active military or you are a veteran of any of the armed forces, most likely you will qualify. You need to connect with a VA loan specialist, and they can go through all the requirements. You do not have to have been deployed in an active duty situation in order to qualify. So in order to answer those specific questions for your specific situation, give a VA loan specialist a call. Number 2, why do you want to use this? There are many reasons. Number 1, it's much easier to qualify. This is a manually underwritten loan. What does that mean? That means you actually have a physical person looking at the entire picture of your financial picture. We're going to look at your income, we're going to look at your assets, and we're going to look at your credit. And we're going to look at to see how much debt you have compared to how much you are taking in to make sure that you qualify for that loan and that you can afford to buy that home. Number 2, the VA comes with no money down. This is an amazing perk that any other program other than USDA doesn't even offer. So you can get in for much lower than you can with any other loan product. Now, keep in mind, even though it's no money down, does not mean that there are no closing costs. Closing costs are basically everyone that's involved in the transaction, you have to pay each person to be part of that closing. And that's what the closing costs are paying for. Money down refers to money that you're putting as a deposit on the home itself. So if the home is worth $500,000, you put $100,000 down, that means you'll have $100,000 of equity and you'll have a loan for $400,000 as the remaining part of that. Next, there is no private mortgage insurance required on a VA loan. With a conventional or FHA loan, if you put less than 20% down, you are required to put, you're gonna have to get additional mortgage insurance to protect the lender in the event that you default. And that's an extra cost on top of your monthly payment. And one thing to note, there is a VA funding fee. It's a one-time fee you pay. That's added to the loan. You don't have to pay it as closing as part of your closing costs. It's just added to the amount of the loan. And there are ways that you can have that amount waived. Right now, for a first-time buyer, it's 2.15% of the loan amount. You can have it waived if you have a disability rating of 10% or more, or you're a Purple Heart recipient or a Gold Star spouse. And we could get into that nitty-gritty as well and talk about your specific situation. Another perk is that you can use this benefit over and over. But not only that, you can have more than one VA loan at a time. And that is an amazing thing that I don't think that many people are aware of. I could go into more in that. I'll probably have a whole video just on that alone because I know that's a very popular topic right now, specifically. Next, the VA has no minimum credit score requirement. I've done a loan for as low as 503 credit score. So the credit score isn't as important as having a clean credit for the last 12 months. So we're looking at no late payments, no charge-offs, no collections accounts in the last 12 months. If you have a bankruptcy, and that's going right to slide into my next point. If you have a financial event, a bankruptcy, those kinds of events, the period that you have to wait in order to purchase is the smallest or tied for smallest of any other loan program out there. Depending on if it's a Chapter 7 or Chapter 13, you could wait as little as a year in order to buy. So give me more, reach out if you need more information on that. I'm happy to expand on that. Another thing is, this is a lifetime benefit that never expires. Once you are qualified to use this, no matter what happens, you have it for life. One of the requirements is that, like, if you were full-time and you you completed your first enlistment and you got an honorable discharge, you're able to use the loan for life. If you step on it and mess up and you got a dishonorable or other than honorable after your second enlistment, you are still eligible because you served that first term honorably. So I know that that is a big factor that you may not be aware of. You might still qualify to use this loan. Next, there's no loan cap amount for this program. I think the maximum that someone has used the VA loan for was $9 million in Florida with no money down. It is possible. You have to check with each specific lender because a lender may have an overlay requirement on that of a cap. Our cap right now is $4 million, but as long as you're buying under $4 million, we can take care of you. So, and just going back to the credit score requirement right now, even though the VA has no minimum credit score requirement, most lenders will have a minimum credit score requirement. That's what they have as an overlay on the requirements for the loan to protect their investors. So you'll see on average 620, you might see 580 sometimes if they're more willing to take on that risk. But right now, look for a VA home loan specialist that does not have that minimum credit score requirement. Right now, with where I work, we do not have a minimum credit score requirement. Next, the type of homes that you can purchase with the VA loan. There are some restrictions. It cannot be under 400 square feet. So those tiny homes that are all the rage right now will most likely not qualify for this program. But you can buy a single family residence or all the way up to a quadplex. You can anywhere from 1 to 4 units you can purchase using that VA home loan. One of the perks of buying a multi-unit property is that you can use the rents generated from those other properties to help you qualify for the loan. So so reach out. I could go more into that in depth on that. I'm happy to do it because we've seen a lot of interest in that type of product, particularly with an ADU. Like if you are buying a property that already has an ADU on site, an accessory dwelling unit, you're going in with already a rentable property. Next, condos. The one limitation on that is they have to be approved by the VA, so they have to be on the VA approved list. And if you find a complex that is not on there, generally it's fairly easy to get on there. It just really determines on whether the HOA board is willing to do that or not. I can help you with that. Townhomes, we could do townhomes. The one caveat there is you have to look to see that the listing agent is not listing a condo as a townhome to try to get around the VA list. We've seen that multiple times, so work with a reputable lender. That's very important. So you can always reach out to Dane and he can help you out with that. There. And manufactured homes. Manufactured homes are completely acceptable under the VA program. There are certain requirements, like it has to be on a permanent foundation and has to meet the FHA HUD requirements. But the one thing that's really taken off recently is custom construction using the VA. It's called the VA one-time closed construction loan, where the purchase of the land and all the improvements done by the builder is all rolled into one loan. And you can do that for up to 4 properties as well. Right now, you won't be able to use the income from the other properties to qualify, but we are hoping to get that worked in the future. But with that custom construction loan, for conventional, they also offer the one-time construction loan, but the caveat is during that whole construction phase of 10 to 12 months, you are required to pay and make interest payments every month on the loan throughout the construction, right? With the VA one-time close, you make no payments during the entire construction, so that you're not making a payment for your home plus whatever rent or mortgage that you're paying now to live in your current home. So you avoid making those double payments during construction. It's an amazing program. I'm happy to talk to you more about that.
Well, hey everybody, my name is Dane Murray. I'm a real estate agent, been in the game full-time for little over 4 years now. Also a Cordon Bleu graduate. I had to find a way to tie in my love of cooking with a way to make real money. And so my closing gift for my clients is a few course, 6 to 10 person party once we moved in, ready for friends and family, and a nice little housewarming. So I provide that, and it's been a lot of fun. It's been a good time. So we started Dining with Dane to help educate the public about the home buying experience and how to tie it in with how to cook. So culinary delights and home buying insights was the tagline. And we're off to a good start. We just had our first little pilot shoot the other day, well, world premiere as it were, for my friend Sean, who's kind of the brainchild behind all this.
Hello, everybody. My name is Mike Chavez. I am a national educator and a licensed mortgage loan originator. You'll find my contact information below. I also am a financial coach. I'm a U.S. Army veteran, and I'm also a landlord. I buy and hold real estate. I do long-term rentals, short-term rentals, and so if you need advice on any of that, I'm your guy. I have my channel, Finances with Mike, on YouTube. I started it as a way to help my friends and family through questions that I received quite often in my history buying real estate and selling it. And it just grew from there. I figured, why not share this information with everybody who has these types of questions? And then once I got into financial coaching, it was just a natural outlet for me to focus on ways to help people with their personal financing, whether that's optimizing their budget or working with them to optimize their credit. So that's really my passion, is the numbers. I'm a numbers guy, and it's what I know. I don't know stocks, I don't know crypto, but I can help you when it comes to real estate.
I buy now because the sooner you start making payments, the sooner your principal starts to drop, the sooner you begin accruing equity. The interest rates, yeah, they're high, but you marry the home, you date the rate. I'm sure everybody's heard that by now. You just got to get in, just get your foot in the door. That's why. Just start now.
Yeah. And then the perks, you want to talk about what the sellers are willing to do right now versus
right now we've got sellers that are throwing out $10,000 in rate buy downs. There's not as much competition. There's serious sellers and there's serious buyers this time of year when it comes to buying a home. If someone's going to be willing to add their inventory to the market and you're in the market to purchase, and you don't get off work until it's 5 o'clock and it's dark out, and you're still wanting to go look at that home, you're probably pretty serious about it. You're not wasting your time. You're not wasting the seller's time by going around and kicking the tires. Through COVID, we had about 1 to 2 weeks worth of inventory. That means if nobody put their home on the market, we'd be out of something to sell in about 2 weeks. A stable market is about 6 months. Anything north of that is a buyer's market. Anything south of that is a seller's market. And we've been living in this seller's market for a long time, but currently speaking, with interest rates just about as high as they've been in most people's histories, it really has deterred a lot of people from thinking that now is a good time to buy. But what that's done is it's made our market soften a little. I'm seeing beautiful homes come on the market at a price point that makes me question if this realtor really knows what they're doing. It's that's pretty low. And then I realized, you know what? I've got some listings on the market that have been there for a little longer than they used to be. And it all kind of starts to make sense. So over the last few years, we've seen home values still increase, maybe not at such an exponential rate as the previous few years, but they've still steadily gone up. But the cost of purchasing, the initial asking price, has started to come down. So I'd say there's probably not been a better time to purchase a home in Southern Oregon in the last, since 2011 probably, as there is now. Despite rates the home prices are low, the competition is low, the rates are not even that bad. Trust me. Get in, get the home, take advantage of your VA benefits, and then let everything else just kind of shake out in time. We will see those home prices go up. That's just a fact of the matter. I mean, in an ideal world, barring an act of God, but it served me well. I've been a homeowner since 2018, and it was probably about the best decision of my entire life. So.
Similar to Dane, real estate has really been a safety net for me in my history. You know, I had a period where I bought in 2000 and my mortgage was $600 when I became unemployed, you know, through no fault of my own. Instead of paying a local rent of $1,500, that $600 a month really saved my bacon. And so it's not just your initial purchase. You compare it currently with your mortgage versus what you can rent, because in a lot of cases it's still cheaper to rent than it is to buy in many markets. But what you don't realize is that every year rent's going up. If you have a fixed mortgage, your mortgage is going to stay the same throughout the life of that loan. You'll probably pay a little more in taxes and insurance over time, but that increase is minimal compared to the rent increase. You're looking at every 12 years, your rent is going to double. Your mortgage is not going to double in 12 years. It may go up by a factor of like 10, 20%, but it's definitely not going to double over that time.
So ever since rent control has been implemented in the state of Oregon, you can pretty much count on the landlord raising rent anywhere from 8 to 11% every year. Now you can either continue down that path and pay that 8 to 11% increase year over year over year over year, or you could purchase and have a little bit of cost up front, but you'll end up in an ideal world, like I said, barring an act of God, be up 5 to 8% a year. So you're making money. It's a forced savings plan. It's something you can live in that provides tangibility. You can't invest in the stock market and live in the stock market. You can invest in real estate and have it provide some sort of tangible value. That's kind of the biggest draw to me. And then you get to curate your space. You get to put your own spin on it. You know, you get to dig a fat hole in your front yard if you want, put Christmas lights in your backyard if you don't want anybody to see. Do whatever, it's your house. Hole in the front yard, but that's just what came to mind when I...
No, that's good. I love it.
And you veterans obviously felt the call to action once. Let's feel it twice and let it really serve you. Let me help you. Let Mike help you. We're here to help you. Give me a call. Send me an email. Let's get this ball rolling. Let's get you on the path to generational wealth and get you into a home that's comforting and welcoming and something you really enjoy pulling into the driveway yet.
I am so cutting out my part. I'm just going to use that. That's gold, man. See, it's from the heart. It's linking it all together. I'm just taking my part out completely. Yeah. Okay. And finally, if you gain any value from this video, please consider subscribing and checking out our other videos. And until then, happy Veterans Day.
Happy Veterans Day, everyone.
How did you close it last time with yours?
I have no idea.
You go.